Hey everyone, Ter here, and in this video I want to talk about why I prefer the ETFs over picking individual stocks for my ISA stocks and shares. So this is my long-term approach, basically for anybody 50 and over 50, but viewers of all ages are welcome. And I will say that the earlier you start investing is far better than leaving it till later, but leaving it and starting later is better than not starting at all. So just like to start off with the usual slide saying I'm not a financial advisor. Uh, any of the information in these videos is not financial advice, and these videos are just for pure entertainment value and showing you my personal journey as I go along on my ISA investing. So ETFs feel simpler to me. I prefer a simpler investing approach. I feel fairly comfortable, to be quite honest, investing in the ETFs. And I've got to be honest, I have no problem with individual stocks and shares. It's just that the ETFs carry a certain amount, for me, of stability, and nothing's guaranteed, but sort of a guaranteed they'll be okay. Not saying that there will be, or stocks and shares other than ETFs are not guaranteed. It's just a personal thought I've got, and I've built my ISA with the foundation of ETFs. And I have to be honest, I've added some favourite stocks and shares in addition to the ETFs. So the ETFs keep me investing straightforward, or keep my investing straightforward. Well, they do certainly reduce stress and avoid overcomplicating things and stay focused long term. And to be honest, if you really wanted to invest, then just ETFs on their own, you could quite comfortably just invest in the ETFs and add nothing else, and they would probably outperform and grow better overall in your ISA than if you did add individual stocks and shares, unless you miraculously find an Nvidia or something that's just starting out and you put all your money into that, which I certainly wouldn't advise looking for or doing. So yeah, for me, ETFs are the strong concrete foundation. So diversification matters, and this is exactly what the ETFs do. They spread your risk across lots of companies. So I've got 3 ETFs mainly, and they spread risks across the USA, the tech world, the S&P 500, and global diversification. So basically companies all across the world. So you're really spreading across lots of different things. So if you should have one in there that's not so good, you got far more that are pretty good, and each one then will sort of carry you through and give you no violent downs through losing lots of money, and vice versa. There's no real uh, super duper accelerations either. It's just steady, manageable financial growth. So, as it says, instead of relying on just one company, the ETFs have got many businesses. And it doesn't matter if one company should struggle, because there's so many, they all outweigh any bad ones. Reduces risk and safer for long-term investing. As I say, really, you could just have the ETFs, and that would be quite comfortable. You wouldn't have to add anything else, and they would do the job perfectly fine for you with your investing. As I've already said, my 3 core ETFs that cover pretty much across the world, mainly USA, but also across the world globally. So the VWRP, you can see global markets. The VUSA is the S&P 500, and the EQQQs is the Nasdaq 100 technology. So focused on the Nasdaq 100 technology, but also then on the wider S&P 500, and then even wider still on the global market. So a little bit of everything. So you've got a wide coverage, and that gives you some sense of stability. And yeah, they form the concrete foundation of my ISA. So individual stocks can be more volatile, and single companies can rise or fall quickly. Well, yeah, of course they can, but I'm not saying never buy an individual stocks or shares, because I certainly have done. But what I've done it in what I think is a controlled way. My main attention looks at the 3 ETFs, and that's where I've focused the main investment. But I also don't neglect or let trail behind the individual stocks and shares I bought. And in future videos, I will be mentioning in more detail those individual stocks and shares. But my main focus, my main concrete base, the ETFs. These will give us the stability for long-term growth. And as I say, certainly add some stocks and shares in addition. That's what I did for a little bit of excitement, but focus on the ones you know that are sort of solid and going to give you continued growth. So yeah, individual shares can move sharply up or down, react to company news, create more stress, feel less predictable. Well, they can apply certainly. That's why the ETFs, in my opinion, are the better. I wouldn't say overall and don't do single individual stocks and shares, just focus mainly on the ETFs. But of course, this is my personal philosophy, and everybody will be different. Everybody will do what they feel is best for them. So, as it says, I still own some individual shares, which I previously mentioned, and they are, or some are, Aviva, Legal and General, Shell, BP. I'm in the UK, and to me, these are just solid companies I've known. I'm in my 70s, I've known all my life. All my life. They were there years ago, and they've been there every year since, and at the moment, they're still there, and I can't see any viable reason to say they won't continue to be there. In my opinion, what I would call blue chip stocks and shares, ones that are pretty much, you see, you could have said that about banks years ago, and then we had the bank financial crisis. But in a way, I would rate those possibly even better than the banks. But again, that's my personal thoughts. So I'm not running the banks there, and I think they're great and great possible shares to own. But I'm just saying, these, in my opinion, are equally as good. So my long-term, my focus is long-term growth. It always has to be for anybody. I always say in most of the videos that 3-5 years is a minimum, but preferably 10 years plus, and build nice and slow and build consistently. So regular contributions, reinvest your dividends, let the long-term magical compounding effect come into play, and it does. It starts off slow and then it zooms. So just be patient and let it do its work as it is doing, slowly and surely, each and every day. And the financial security will come later in life, without a doubt. So this is a long-term journey. I'm thinking in years, not days. As I say, 3 to 5 years minimum, preferably 10 years plus. Just be prepared to be patient, do steady investments. So I personally set up a £50 per month direct debit. Doesn't have to be 50, that's just my personal choice. With the platform I'm using, I'm not sure. I think you can do it from £10 or lower. So £10, whatever you can afford. And if you set it up on some sort of direct debit, then it's done automatically. So you won't think some months, so I think I'll leave it. So this regular investment, again, part of the magical compounding, that plus the patience, plus the reinvesting dividends, this is what's going to get you this slow but sure, and then zoom off position, and your ISA will grow. So giving you long-term financial security. So definitely don't need to be complicated. Use an ISA easy platform. Personally, I use the Trading 212, but that's not saying you have to use that. You can use any platform that you feel comfortable with, and it doesn't have to be difficult. You just set it up, some basic details. For me, then, as I say, I set up a direct debit. I picked my 3 ETFs and put my initial investment in. And then, to be honest, I did add some stocks and shares later. But I just automatically pushed the automatic investment by doing the direct debit just to keep feeding the ETFs and the stocks and shares I've got, and just automatically reinvested the dividends. So I could, in effect, just forget it now and I wouldn't have to look again. But that's not for me. That's way too boring. I like to be involved every day and every week and seeing what's happening, seeing the dividends come in, seeing the investment come in, seeing it slowly grow, and waiting for that day, which I know when the magical compounding happens, it will take off. So consistency matters, patience matters, long-term thinking matters, and simple system, and this can be a simple system, will often work the best. So my final thoughts: my ETFs give me the confidence as a beginner investor. Nice and simple, widespread, no need to panic about anything. They build steadily, and I'm learning continuously, which I certainly am, and I enjoy every day learning. Stay patient and enjoy the journey, and small steady steps will build something meaningful. I truly believe they will, and I hope if you're watching my videos, you're getting some excitement from them. I try to put out excitement because investing can be such a dull and boring, loads of figures, loads of yield figures and percentage figures, all really, really important. But I watch that many videos and you start to fall asleep sometime. So I like to try and put a bit of excitement into the videos. I don't know whether it comes across. I hope it does. If it does, comment below. But I like to put some excitement in the videos, and I hope you want to watch, because if you watch, that helps me build the YouTube channel. That means more people will see these videos. That means more people who haven't invested will start to seriously think about doing some investment, and that will be a benefit to them. So it's my small contribution in a way, and I'm not saying that in any pretentious way. I just hope it helps people. And I always say the sooner you start, the better. But even if you're 50 plus, starting 50 plus is better than never starting. So yeah, hope you've enjoyed the videos. If you do, please subscribe, like and follow. Comment below. I really enjoy you following, watching the videos. I will try to answer any comments if comments come, and I'll see you in the next video really soon.